Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report, and we have the same title as last week, Top Stocks Back in Rally Mode. And this is for February 15th, 2025, and folks, the month is more than half over already. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. And let's look at our sector all-stars, and we can see that the QQQs went up over 2%. About 2.5% since last week. The S&P went up 1%, and our portfolio stayed at 5.6%. Well, actually, last week it was 5.7%. Now it's 5.6%. And we can see that the stocks went up, the stocks went down, and nothing did anything drastic in this portfolio. But still, 5.6%, even though it didn't move much at all, or actually moved down 0.1%, we are still way above the S&P 500 and almost a full point ahead of the QQQs. So let's go to the top stocks in the NASDAQ 100, which is the symbol QQQ, and we can see that we were up 0.1% over last week. And what really hurt us in here was Trade Desk. Oh my gosh, it had a 31% decline, actually. So it hasn't helped us at all, but the only way it could go, hopefully, is back up. So we'll see what that does. But meanwhile, we're up 0.1% over last week. We're almost doubling the S&P 500, and we're still way ahead of the QQQs. So this portfolio is doing very, very nicely. And we have some nice stocks that are doing very well in there. Netflix up 17.8%. This is for the 6 weeks, January and half of February. Meta Platforms is just rocking and rolling, up 25%. Fortinet up 16%. KLAC with semiconductors, and it looks like semiconductors might be coming off the bottom. We're going to see that chart in a little bit. So that'll be good. And CrowdStrike, cybersecurity, 31%. Wow, we like that. So we're doing very, very well in all our portfolios. And don't forget, I put out a report, what was it, Wednesday or so, that our growth portfolio was up 9%. Right now it's up just about 10% for the first 6 weeks of this year. So the growth portfolio, which is more diversified than these two portfolios in the ETFs, but the growth portfolio is doing very, very well, as some of the stocks that we picked toward the end of last year going into this year are doing very, very well for us. So we like that growth portfolio. I think it's the first time it's been ahead of any of the ETFs that we're talking about, the All-Stars and the top stocks in the NASDAQ 100. So good for the growth portfolio, folks. We're doing well in all our portfolios, outperforming the S&P 500 by a long shot in the growth portfolio. It's up 3 times what the S&P is up. Okay, let us look at something different here. This is the SDCI. It's the Summer Haven up in here, Summer Haven Dynamic Commodity ETF. And folks, it contains all sorts of futures on the various commodities. So it's not like we can go in there and find out what stocks we should be buying. But what do we want to see in here, or not do we want to see it, is that when the commodity prices go up, there's usually something going on with inflation. And we don't care for that very much. So I wanted to show you this right away. Now let's go to some of the other commodities that we are involved with. We don't have them in our portfolios, but let's take a look. So again, this is the commodity index, and look at this line going straight up. Now this is a full year. So I just wanted to show you that we were kind of stuck in this area for a very, very long time. And then all of a sudden, just the beginning of this year, really toward the end of last year, about 6 weeks before the end of last year, it started moving up, and it has been going up ever since. So it's doing very, very well. And the thing is it a precursor of inflation? Now let's look at oil, and oil was on a run in here, remember that? And then it was going all the way down, and now it's kind of, and this is when the president was talking to Saudi Arabia about loosening oil. And of course, we are going to drill, baby drill, or supposed to be anyway, then that's what this is trading off of, that kind of news. And it looks like it's just starting to maybe balance out in here. And maybe because of the commodities, it will turn up also in here. But right now, oil had these big runs, big decline, big upward move, pretty big decline in here, and now it's just kind of sitting around. Let's look at transportation, and because how was the transportation moving with the commodity prices going up and oil kind of staying still? Well, it's starting to operate its fleets of trucks and buses more efficiently because oil has stopped going up, or it's kind of holding in there. And this is going up a little bit because maybe the overall market is going up. Is it leading the market? Is it following the market? Or is it doing exactly what the market's doing? So this is where we stand with the transportation, which is good. We like to see that because that means the market is pretty sure to follow this. And let's look at gold. So we'll look at one more commodity here. Yeah, gold is on a rise. It hit a new high. And then one of the money managers who's been in gold since forever, actually sold out his gold position. And I don't know if that has anything to do with this drop here on Friday. So that's, and we're looking here, and he was probably looking at this and saying, okay, we're overbought more than we ever have been in a long time. And maybe that's what he saw. He sold, he was on TV. Maybe a lot of other people sold their gold too. And when we look at the QQQs, and here we go, folks, are we trying to break this new high? Of course we're trying to break this old, I shouldn't say new high, this old previous high. And it's not a previous high, it's still the high in the market. And our indicator down here is saying, I want to go up. So we're looking very, very positively at this market. Will it break through? And boy, that's hard to say because there's so many unknowns going on in the market right now. And remember, there was that little threat that if the group overseas keeping our hostages, there will be some action over the weekend. So who really wants to stay long in the market over the weekend when that's hanging over our head? And then there was no comment after that. So we're looking for these hostages to be freed on Saturday. And with those kind of threats or whatever you want to call them, warnings going on, it's hard to hold long positions over the weekend if you're a trader. In fact, I bet you most of the traders will sell off because I'm recording this just before the market closes on Friday. And so therefore we'll see if there's a little sell-off. And the S&P 500, yep, there it is. There it is, trying to break this intraday high over here. And folks, it's up just 0.7% right in here, or it's up 1/100th of 1% at 0.7 points. So we're just on the verge of possibly breaking out here. I have a feeling that if we don't hear any bad news over the weekend, that next week we just might see new highs in this market. But we just have to wait and see. We are overbought. Now we're looking at this indicator up here, which is stochastics. Yeah, we are overbought up here. And when we look at the Dow, well, the Dow's not quite as confident as the S&P and the QQQs, the NASDAQ 100 and the NASDAQ itself, because here's the high in the Dow over here. Now, we're not far from it, folks. You know, one move in the Dow could bring us up above that. Problem is that this indicator down here is pointing down, just drifting down, and right up here in this indicator, we are sort of in the middle. So the Dow doesn't know what it wants to do. Again, thinking about the weekend. And let's look at the financials. The financials have stopped their rise, and for the past almost month or several weeks in here, it's just kind of flattening out in here. Will it go up with the rest of the market? Well, probably, because we are sitting at almost new highs. Here's the old high right in here, so we're really, really close. In fact, you can just barely see it. This black line did go up to test the previous high, or almost test the previous high, so it's very, very close. And let's look at technology. Technology is starting to trend up a little bit. So that's good news for our portfolios. Just started up. Of course, you can see here on Wednesday that it was a down day. Monday was a down day. So it seems to be climbing out of that. And we are looking at the 50-day moving average, which is the blue line. 20-day moving average, which is this green line. The 20-day seems to want to cross the blue line right in here, and that'll be a silver cross for us. So we'll see what happens. And the semiconductor, yeah, we're liking this right in here. This is giving us a little buy signal here. We're starting to come up. We are sitting at the 200-day moving average, which is a very important average, and it looks like this indicator down here might want to turn up. So that's what I mentioned about the semiconductor before, that we just might have something going here, and we just might break out to new highs next week if there's no bad news over the weekend. And of course, all the techs and the semiconductors will go up with them. But the semiconductors have quite a long way to go to get back to old highs. And of course, NVIDIA has taken a big hit, but it's looked like it has spaced out, and it's starting to come back little by little. And we'll just have to see what happens. So folks, things are starting to look good. The market wants to break out. It's waiting for news. The problem is that earnings season is just about over, and usually we have a little weakness after earnings season is over. And we will just see on the news, people are worried about the tariffs. People, of course, what they're doing with the tariffs is trying to get the tariffs equal in the countries that we're trading with, because they're charging higher tariffs on our products going in than we're charging on their products coming into the U.S. And once those even out, we might even hear such things as, okay, if you're charging 20% on tariffs and we're charging 20%, let's take all the tariffs off. And if you think about it, when you think about what Ronald Reagan said, 45 years ago, and what Nobel Prize winner in 1976, Milton Friedman, says, they were all for no tariffs at all, and most economists are for no tariffs. So the only opposite we hear from the president administration, because they're talking like those guys did back then, which is for a freer economy relative to trade, relative to transparency in prices. And higher tariffs are not part of that rhetoric. So maybe, just maybe, they're talking about, the administration is talking about, okay, we're going to raise tariffs unless you take tariffs off our products going into your country, equalize them. And if they equalize them, guess what? We don't need the tariffs. Nobody needs the tariffs on either end. So kind of thinking that's where it's going. You have heard that here, folks, first. So anyway, go out and have a good time this weekend. Be with your family. Take your mind off the market. Walk on this beach like Jimmy Buffett once did. You've got to learn how to invest even better than Warren Buffett does now. And folks, we have been outperforming Warren Buffett in a big way over the past 22 years. So folks, have a great weekend. Be safe, and we'll see you back here in a couple of days.